Yo, what's up? Okay, so I want to look at the historical flow page. I use this all the time. I pretty much don't take a position without it. I'm also like mega big mad because it's 12:15 at night and I just got to near the end of the last one and then I had this like sneezing attack, so I had to refilm this whole thing. So I'm less than pleased. Okay, so I'm going to kind of go through each of the portions of this. The first being the daily flow breakdown, the second being the chart, the third being the put to call ratio, and the fourth being the option chain you're looking at. So, starting up here, I want to go through the daily flow breakdown. You've got call volume, put volume, and the total open interest is probably the most important pieces. The price is important, but I'm normally looking for some other stuff. So the first thing I look at primarily is the call and put premium. And here's why. I really, really enjoy seeing firing off these circles. Pew, pew, pew. I really enjoy seeing call and put premium divergence. That's usually a very bullish side for me, and we have it here. I'm very happy. The second thing I look at, most importantly, is the open interest. The reason why I'm looking at the open interest is because I want to see if people are buying and holding more contracts of the ticker. So here, whichever will be why, Bed Bath & Beyond, we end up having the perfect setup for this. We've got call and put premium divergence heading back up, and we've got put premium going down with large OI increase. So that's bullish. So that's why I love this part. The second, I use the chart to just kind of show me simple things like breakouts, that sort of stuff, so that I know I'm not completely screwed on the chart. Um, so here we see on the hourly, it's working on a little breakout, hoping that can continue up. And we see that 9 level roughly as resistance. Next up, this kind of gives you a snapshot, all this stuff, pew, pew, of what you're going to see down here. So here you get a sense of the call volume, which is important because you kind of see historically how it relates. So here with MoneyGram, we saw this giant spike on the 25th, and then it dipped after that and kept dipping. And now on Friday, it's heading back up. The call volume percent, 99.5. Now here's the crazy part. The put to call ratio, which we talked about before, we like to see it under 0.7 if we're bullish. The shit's down at 0. That is something I haven't seen before. Historically, lately, it's stayed pretty low, so it's not, unheard of, but that just adds more to our bullish column. Sorry, I came in deep danger of sneezing again, and I was going to lose my mind if that happened. The next one, the March 18th, $10 call is the contract I'm eyeing. I'm kind of cheating a little bit because I'm showing you what it is I'm looking at. But here we see that the spike in premium was on January 24th. And we see since then the position's been added to, but not really taken away from on the open interest. So to me, that says we're kind of trucking along. I would love to see another big spike like down here. But either way, I'm happy just with the fact that we haven't seen any large sell offs in the position. So that says to me that the person that is interested in this contract has not dumped in mass. Probably. Nothing's ever certain, but probably. And then these are just a visual representation. So you can see really quickly where that spike is. That is abnormal as hell. All right. The next one that I'm looking at. So just to review really quick, actually, daily flow breakdown, chart, volume, and historical volume in the options chain you're eyeing. This one is probably. Hold on, let me hit it with the circle. Pew pew. This one's probably the most important. So next up, we have Zoom, which I'm eyeing. And by the way, these are all 3 from the watch list this weekend. So you see here, nothing to write home about on the call or put premium, but we do see that rise in open interest. So that's interesting to me. Next, we see another breakout going down. Again, this is probably related to movement in the indexes today, which is Friday, which was, absolutely insane. The put to call ratio, really nothing to write home about. Kind of trucking along in that 20,000 call volume area roughly, but coming up a little bit from where it was down here. On the first, we saw it as low as 12, then we built it up from 14 on the second. So we see that we're kind of trending in the right direction. 0.79, obviously higher than we want, but I like to see that it's kind of going down from those highs right there when the market had a difficult time during that little poop on, I think it was Wednesday. Here with Zoom, February 11th, 160 call. That's the one that caught my attention. So this is really a good time to point out that a lot of times I'm chasing specific contracts, not the flow. So for example, this call and put premium doesn't scream anything at me. The overall flow doesn't scream anything at me. The put to call ratio doesn't scream anything at me. So that actually makes it more interesting to me that someone went pretty heavy on these deep outside the money contracts, right? Look at that visual representation. So on the historical flow, I'm looking at the sort of numerical representation, and then I'm just looking at this and saying, my God. So, either someone's really dumb and just chucking outside the money calls at Zoom praying for a miracle, or they might have a good idea about something. The next up, Bed Bath & Beyond, everyone's favorite. This one here, call and put premium, not great, but the open interest. My God. It's climbing up steadily, keeps climbing. This is 2.4 that we're on today. So from 2.2 to 2.4, we saw some activity. From 131, we saw some big activity to 2.2. We see on the chart, we're working on a breakout. Again, probably a market-sponsored breakout on the huge run we had today. Down here, call ratio, down to 0.31. Oh, whoops, sorry. Down to 0.31. Fantastic, great, I love it. You see that it's coming down from that 1.2, 7.79, 0.4. We're steadily increasing downward, which is a positive sign. And then last, on the 19.5 call, is the contract I'm eyeing. We see that 2,950 volume. My circle wasn't working for a second. To 140 for open interest. And then visual representation, bam. So again, BY, I'm chasing contracts. But here's a really, really key thing, really quick. I want to show the importance of not just looking at volume, I'm always showing this, but also looking at the specific contract. So I pulled up the Bed Bath & Beyond contract, and here's why. So you see, show charts, it's bearish, which means they're selling these calls, right? But not necessarily. So you see it's bullish, 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 but then if you check the sells, it's actually a part of a vertical call spread. So we see here that they, oh wait, sorry, I'm showing the wrong one. So you see here that the call sells for the 19.5 call sell, 17 bought, sold 19.5, 17 bought, and then they bought these two 19.5s. So what does that mean? That means that the person was actually bullish and that these sells are a part of a bullish order. I'm not going to get into spreads here. A, it's just going to take too long. B, I don't really fully understand them. B is probably more important. I'm not going to lie. I had to make sure this was bullish with a quick Investopedia search. So according to Google Investopedia, this is bullish. But what I wanted to show just with that Investopedia side is that you have to actually look at the contracts. So you can't just say to yourself, these are all 19.5s, nor can you say to yourself, this is a bearish block. You got to check here when it's part of a multi-leg strategy to get a sense of what you're seeing. I have no shame about just clicking on the multi-leg, looking at, okay, so they're buying 17s and selling higher. Quick little Google search. That's a bullish vertical spread. So that's part of a bigger strategy. Anyway, the point of this, before I got sidetracked, was the historical flow. So the daily flow breakdown, we're looking for either call, put premium divergence, or vice versa. If we're bearish, we're looking for rises in open interest. We're looking for basic chart patterns here, see where our resistance is, support, because that'll help us determine where we want to enter. We're looking right here, just see where our put to call ratio is, how the call volume is by comparison. Pew pew. And then down here with the options chain, we're looking at the most important date that we're eyeing. So, for example, here I'm eyeing the 3/18/10 call. Just kind of checking it out, making sure that there were no big sells of the position that would make us panic, knowing when we know that they entered, seeing if they exit, seeing if they add. So that's the historical flow page. All right. Sign up for the It's Cool. Later.